The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
European crypto advocates are fighting a provision in MiCA, the markets in crypto assets legislation, working its way through the EU Parliament. That proposes to restrict US dollar-backed stablecoins. Joining us now with the details is Robert Kopitsch. He's the Secretary General at Blockchain for Europe. Welcome there, Robert. Thanks for joining us. So, Blockchain for Europe is a crypto lobbying group, and it includes the major exchanges like Binance and Crypto.com. And taking a look at this legislation here, so the largest stablecoins out there, Tether, USDC, and USD pegged are USD pegged stablecoins. So tell us the scope of the proposed restrictions here, and is this a total ban on USD backed cryptocurrencies?
Hey there, thanks for having me, and happy to elaborate a bit about this. I don't want to ring a bell and cause any panic, because the biggest issue about what we're currently discussing is a small nuance, I would say, that has an important impact on what it means for US dollar-denominated stablecoins. If it's implemented and understood the right way, I think we're fine. If it's not the case, then this might cause a long red tail of issues that might follow after this. And the actual issue at hand, as you know, MiCA, so the Markets in Crypto Asset Regulation, is a comprehensive framework at European level to capture all the services provided by crypto asset service providers, stablecoins, NFTs, including token definitions, also custody, and so on. So it's a very complex file. And because it's a process that is ongoing already for 2.5 years now, including the consultation process, there's a lot of wording that needs to be reread and rediscussed, and that's why there's often details that cause issues and create confusion. And one of those is the one that we're discussing today. So just up front, the MiCA is not finalized yet, right? That's a very important point. So still the nuances are discussed. But as I said earlier, it all depends on the nuance. The current provision that we're worried about talks about means of exchange in linkage to, as we call it at European level, asset reference tokens or e-money tokens. That's the definitions for stablecoins. One is basically built on the definition of Libra, which, as you know, doesn't exist anymore. And the other one is simply an e-money denominated or e-money listed stablecoin that can be listed in several types of fiat currencies like the euro, the dollar, and so on and so on. And as the EU's main currency is the euro, there is a political interest that this stays the way and that we don't shift over time to payments means that are denominated in fiat currencies outside of the influence and the realm of the ECB and the other member state central banks. And that's why there's a provision that currently limits all means of exchange of traded, stablecoins of non-EU fiat currencies, including the dollar-pegged Tether, USDC, Binance USD, etc. And there, as you know, take the vast majority of the market right now. So it would have huge implications for consumer protection, the liquidity in the markets, for DeFi in particular, but also would create some issues for small and medium-sized projects and CAS, because they wouldn't be allowed anymore to basically offer and provide payment solutions or trading solutions in the EU. The question now is, and that's the issue, is what does means of exchange means? And there is no clear definition. And that created the problem from the beginning, because depending on who you ask in the European institutions right now, and as I said, it's in debate. That's why nobody has a clear answer. Some mean everything that relates to the exchange of crypto assets. So including, like, for example, if you exchange Bitcoin into USDC or any similar transactions. Or others say that it's about the actual payment with a stablecoin. And if that's the case, then the numbers that are currently out there as measuring sticks, so that's 200 million of transaction volume per month in USD stablecoins, and above 1 million transactions per month. And that would be something that is currently not reached and therefore creates no problems. If you include the actual exchange of crypto assets, then we're far beyond those numbers. And that would literally mean that at a certain point of time in the month, those providers of those services would have to basically stop it and offer a plan of alternatives, which, as you can imagine, would create a huge disruption in the market. And that's why we raised it. Mm-hmm. So it's not that there's something written in stone, but it's something that if it ever comes into law, also considering the fact that stablecoin applications would enter into force in Q1 2024, we basically would have to create out of nothing, because right now euro-denominated stablecoins are 0.2% of the market, which is pretty much very little. Let's be nice. So basically the market from the beginning, so that you need huge efforts from the market makers, the exchanges, and that's not something that you can pull off in 12 to 15 months. And that's why this is a serious issue. But as I said, we will know more about this in detail in September. Currently, there's two interpretations of this. One is very worrying, and the other one leaves room to breathe. So that's in a nutshell. Sorry for being so long.
No, it's very comprehensive. I like that, you kind of caveat this with, yes, it's very comprehensive legislation to regulate crypto assets in Europe, but there are provisions in there that could use a little work. I mean, earlier iterations of MiCA said that they would consider banning all proof of work mining, and that has eventually worked its way out, or at least is pretty. They're not enforcing it. But with this provision, do you have a sense of whether there is recognition that maybe this would have serious consequences on the crypto industry, and what would be the solution, given that they want to make sure that European-pegged stablecoins are more used than US dollar-pegged stablecoins?
So the irony of the whole thing at the European level is that on the technical level, this is a very well understood issue. So nobody doubts those facts. Everybody knows those numbers. I think we're just reiterating something that the guys that know the technical details and delved into this in a more thorough and in-depth way, they're aware of. The problem is that this is a political issue, right? So there is a serious concern, probably for good reasons, that stablecoins will have a major role in our economy in the future. So there's two solutions to that. The first one is that we come up with a digital euro, which is in planning. There was a consultation by the ECB that was conducted and received record numbers of input, and is supposed to provide a solution. The current state of this debate is a bit complicated because the ECB basically needs to provide a solution they don't want to provide, simply due to the fact that it would change the existing banking system and the influence of the central bank. That's something that they are very hard. Therefore, they are taking the time to see what's necessary. But on the other side, there is this still existing fear of something similar to Libra, right? The Facebook initiated coin is dead, but who says that another big tech company doesn't come up with a similar solution, and therefore they're very afraid that this payment solution will take root in Europe and might substitute the euro-based payment solutions that we have currently. And that also is the same reason why European central bankers and politicians are not so keen to leave the field on stablecoins to the dollar-denominated stablecoins, like, as I said, Tether and USDC and so on. But on the other side, basically not taking into consideration the fact that there's a reality on the ground that would be a huge risk for market integrity. And that's basically what the solution would be, because it basically forces European consumers to use euro-denominated stablecoins, which have very little liquidity. And as I said, this is not something that you can change overnight. You need to create markets for that, create liquidity for that, and that will take much longer than just 12 months. So there's this balance between what's the technologically and economically feasible reality, or the reality, and what is and what can be done on a political level that policymakers and central bankers who are in charge of the monetary policy of the European Union are also not too concerned. And it's difficult to come to a clear-cut solution, right? Because it's either or in an ideal scenario for both sides. So there needs to be probably a compromise, and the question is who is responsible for taking this decision, and secondly, how this compromise will look like. This might happen at the supervisory level, where you come up with new guidelines on how those
Right.
Thresholds might be increased or adapted, and it's a complicated issue that has a very political aspect to it. That
Well, it's the
especially
future
these
of money
days.
in Europe. Robert, quickly, what are the next steps for MiCA, and is there a timeline put in place on when they hope to have this passed?
So the political agreement on how this should look like was achieved in end of June under the French presidency. Currently, we're in the presidency of the Czech Republic. They're trying to conclude this file by the end of, I would say, Q3, so end of September. That's the ideal scenario. It might take a bit longer because of complicated issues. There's also some others regarding supervision. And then once this is approved, it goes into the voting process that will take another 2 months, 3 months maybe. And then 18 months after that, MiCA will enter into force. So we're talking about end of H1 2024. And for stablecoins, it's only 12 months. So this will be probably in Q1 2024 or even the end of 2023. That's where this whole thing should enter into force and become a reality.